This week on the Business Owner's Corner, I want to cover a topic that comes up really, really often in our financial planning practice. And that's for owners of electrical companies, electricians, whether you have employees or not. And this is true across most of the trades we're seeing. Over the last couple of years, business has probably been pretty good. There's been a lot of demand for those services, and a lot of businesses have a ton of cash sitting in the bank account. And a lot of owners of these businesses that we're talking to have gotten to a point where they don't really know how or when to distribute the cash from their business. They don't really understand how it would be taxed. And so I wanted to spend a minute or two just talking about how we like to think about this, because any extra cash you have sitting in the business is losing purchasing power by the day. Inflation, as you know, is a thing right now. We have the price of goods and services that we like to consume going up around 7% per year. The cost of a lot of materials and energy is going up a lot faster than that. So if you have extra cash sitting in the bank account, you're earning a heck of a lot less than 7%. They're only paying you maybe a quarter of a percent per year on those deposits. So the longer that extra cash sits in your bank account, the more purchasing power and ground you lose on the deposits. So typically, the way we like to think about this is as a function of your monthly operating expenses. And if you're someone who maybe works as a sole proprietor or has an LLC or an S corporation, those are all pass-through business entities. So it doesn't matter whether you leave cash in the business or whether you take it out of the business and put it in your personal account. You're going to be taxed on it as an individual either way, because sole proprietorships, LLCs, and S corporations are all what are considered pass-through business entities. So as I mentioned, we think about this as a function of your operating expenses. If you're someone who has $10,000 a month of payroll and gas and equipment costs, maybe you have rent in an office or something like that. If you have $10,000 of monthly expenses, most businesses like to function with somewhere between 3 and 6 months of those expenses sitting in the bank at all times, because anything can happen. Revenues could dry up tomorrow. We don't want to be in a position where you're too tight on cash and eventually run out and have to make hard decisions about whether to lay people off or sell equipment or do something else. We don't want to be in that position. So we always need a little bit set aside for that purpose. And again, the range is 3 to 6 months based on comfort. So if you have $10,000 a month of expenses, and you prefer to keep 6 months worth of expenses in the bank for your working capital or emergency fund, then you take 10,000, multiply it by $60,000. Now, I realize that monthly expenses are somewhat variable. Sometimes you need extra cash to replace a truck or bid on a project or buy materials or something like that. You can get as scientific with it as you want. If you need an extra 25,000 to buy a new truck or something like that, then I would take 60 using our example and then add 25,000 to that if you have an upcoming outlay. That being said, if you have 150 grand in the bank and you only need 60,000 of it for your working capital, which constitutes 6 months of expenses, you have $90,000 too much in there. And that $90,000, again, if you leave it in the business, it's going to be taxed. If you take it out of the business and pay yourself with it, it's going to be taxed there too. So it really doesn't matter. So if you have 90,000 extra in the business, what you ought to do is either look for potential eligible expenses that are deductible, contribute to a qualified retirement plan, or maybe some kind of deductible company benefit to where you can reduce the taxation, or pay down debt or invest it. And if you've checked all those boxes, what you probably want to do is take that extra $90,000 out, pay yourself, put it in your personal bank account, and then use it to pay down personal debt or fund your own investments. Look at buying a rental property. There are a lot of different things that you can do with it. The point is, we all need some framework for managing our excess cash, because at some point there is such a thing as having too much cash in the account, because again, it loses purchasing power to inflation every single day that it sits there. So point being, figure out what that looks like for yourself, and with any extra dollar sitting there, try to do something as efficient and effective as you possibly can with it.